Did you know that there are three major companies that control almost all of your credit data? And what they report can make or break your ability to buy a home, get a car, or even land a job. So, welcome to day 6 of March Money Moves, elevating your credit in 30 days. I'm Sabriyah Callis, your partner in finding and funding your new home. And today we're pulling back the curtain on credit reporting agencies. Those are the power players that's behind your financial reputation. So by the end of this video, you'll know what credit reporting agencies actually do, the three big ones that track your financial history, a brief history of credit reporting and why it matters to you, and how these agencies actually shape your credit score and financial future. And in our next video, we'll be breaking down installment loans and their impact on your credit. So don't miss it. Let's go ahead and dive in. What is a credit reporting agency? You'll hear the term referred to as CRAs, and they are companies that collect, maintain, and they distribute consumer credit data to lenders, landlords, employers, and even insurance companies. So they don't make the lending decisions, but they do provide the information that lenders use to approve or deny credit applications. They're important because your credit history, payments, debts, they are all tracked by these agencies and they compile your credit report, which directly impacts your credit score and financial opportunities. So let's talk about the three major players in credit reporting: Experian, Equifax, and TransUnion. Experian is the first one we'll talk about. They were founded in 1996 with roots dating back 125 years. They're headquartered in Dublin, Ireland, and this agency's key features include credit monitoring services and identity theft protection. They specialize in data analytics and decision making tools for businesses, and they use FICO and Vantage Score models to assess your credit worthiness. Secondly, we have Equifax. They was founded in 1899, over 120 years old, and they're headquartered in Atlanta, Georgia. They are one of the oldest credit bureaus in the world with a focus on risk management, fraud detection, and their reports are often used by mortgage lenders and government agencies. The final one we'll talk about today is TransUnion, and they was founded in 1968. They're headquartered in Chicago, Illinois. One interesting fact about TransUnion is that they were originally part of the railroad industry and then later they transitioned into credit reporting. They provide consumer and business credit solutions and they offer free credit reports through partnerships with banks and financial institutions. Now, keep in mind, each bureau may have slightly different information about you, which is why your credit score kind of differs between each one of them. So your credit score is calculated using data from these agents. With each of these agencies, they do impact your score a little bit differently. They all track payment history. Did you pay on time? They look at your credit utilization. How much of your available credit are you using? There's the length of credit history. How long have you had credit? Then there's the new credit inquiries. How often did you apply for new credit? And then they look at the credit mix. Do you have a good mix of credit types? What they don't track, though, is your income, bank balances, personal spending habits. Remember, you're entitled to one free credit report from each of the big three agencies we mentioned above every 12 months through annualcreditreport.com. You want to check your reports regularly to catch errors or fraud early. Now that you understand who controls your credit report, you can now take action and control over your credit score. I want you to check your reports for errors, incorrect information that could be hurting your credit, dispute any mistakes that you see. Next, I want you to monitor your credit regularly. Use free services like Experience Boost or Credit Karma. Also, keep your credit utilization low. Try to use less than 30% of your credit limit. Next, make payments on time. Even one late payment can drastically drop your score significantly. So limit new credit applications because too many hard inquiries, they're going to lower your score. Okay? That's a wrap for today's video on credit reporting agencies. And I hope you found this breakdown to be helpful. In our next video, we're going to be covering installment loans, what they are, and how they impact your credit. So make sure to subscribe so you don't miss out. Comment below, you guys, which credit reporting agency do you use most often to check your credit report? I'd like to know. Like, share, and subscribe while you're here if you're enjoying this series so far. And I look forward to seeing you on the next video. So let's keep moving forward on our journey to better credit. Bye now.